Thanks for clicking. The London and St. Thomas Association of Realtors, LSTAR, released the data for the month of August for London's real estate market today, showing continual price declines in our benchmark, average, and median prices. This comes at a time when the Bank of Canada is set to make its interest rate announcement tomorrow, which will no doubt put even more downward pressure on our real estate prices here in London. So what I want to do today is look at London's real estate data for the month of August, looking at how it compares to our real estate data almost a year ago. And I also want to look at how affordability has changed since this point in time last month, as affordability is actually getting better. As mentioned, the Bank of Canada is set to make its interest rate announcement tomorrow, and we'll obviously have updates out on that announcement on this channel. If you want to get those updates, make sure you click like and subscribe. But for now, let's get into London's data. First off, the benchmark price. The benchmark price for London and St. Thomas, the price which represents the home with the most popular set of features. The benchmark price was down in London in the month of August to $599,500, down almost $25,000 from July's benchmark price of $624,000. So we have a $25,000 difference in the benchmark price in just over a month. And if we look way back to 11 months ago, we can see that the London St. Thomas benchmark price was $596,000, just $3,000 less than it is right now. So as of August, London and St. Thomas have lost all of the price gains made on the benchmark price for the past 11 months. And we can see something very similar in the average price of a home in London. The average price of a home in London in August was $632,000, which was down just over $40,000 from July's average price of $673,600. So a $41,000 price drop in just over a month. And if we go all the way back to September of last year, we see an average home price of $644,700 and change. So again, just like the benchmark price, we've lost almost all price gains made on our average price in the past 11 months. And the median price of a home in London was also down in August. The median price of a home, if you'll remember, is where half as many homes were sold below that price and half as many were sold over that price. The median price of a home in London in August was $585,000, which was down $5,000 from July's $590,000. So the median home price definitely not down as much as the average or the benchmark, but still continuing its downward trend. And the downward trend is also present in the sales to list price ratio. The sales to list price ratio, if you'll remember, measures how much a house sells over asking price. So if the home is on the market for $100,000 and it sells for $110,000, the sales to list price ratio is 110. That was also down in the month of August to 97.8. So on average, homes sold for 97.8% of the asking price. So homes are selling under asking, and even more so than in July, when the average sales to list price ratio was 98.9. Not only are homes selling for less, they're selling for less under asking than they had in July, and way less than our record when in February they were selling for 125.6. Or on average, they were selling for 25% over asking price. Homes are also sitting on the market for longer than they had before as well. The median days on market, that is where half as many homes are sold over this many days and half as many are sold under these days, was 21 in August, up from a 17 median days on market in July. And finally, the months of inventory indicator. That is where if no more homes came to market, how long would it take for London to run out of inventory? Our months of inventory was actually down in August to 2.5, down from the 3.2 months of inventory that we had in July. So there's not as much inventory out there compared with how many buyers as there was in July. That's due in large part to it being the end of the summer market. But there's still far more inventory than there was in February when we had the months of inventory indicator at 0.5. So whereas in February we would have ran out of inventory in a little over half a month, right now we have 2.5 months of inventory if no more homes come to market. So all in all, the benchmark price, the average price, the median price, all down. The benchmark and average price are down to where they were, very close to September of last year. erasing 11 months worth of price gains. But is housing any more affordable? Last month, when we looked at July's data, the average home was sitting at $673,000, and we had to qualify based off minimum down payment requirements and a 25-year amortization using an interest rate of 6.49. At that time, the amount of income needed with zero debt was $165,000. Using this month's data with an average price of $632,000, and the interest rates are still the same, for now at least, we can see that we now need a minimum income of $150,000. Now, households have to make $15,000 less than they did 1 month ago to get that average house price. And we're also, obviously, the minimum down payment requirements are less as well. So, at least in London, for that average house price, for that average home price, it is more affordable than it was a month ago. And as we've talked before on this channel, this trend is likely to continue so long as fixed rates remain the same. Variable rates are set to rise tomorrow once the prime rate goes up, with many thinking it will be going up by 50 to 75 basis points. So obviously that will get less affordable, but the fixed rates continue to remain in that 4.5% range. So as prices go down, as real estate continues to lose steam, the affordability does get better, at least in certain places. With that said, whether or not mortgage rates will remain around that 4.5% range remains to be seen, but we'll obviously continue to track those rates on this channel. If you want to get those updates, make sure you click like and subscribe, and thanks so much for watching.